Moving to point two, we're going to talk about the ISM Institute for Supply Management. They released their January Purchasing Managers Index. The ISM PMI is down and better than actually expected.
Right. So the ISM is the Institute for Supply Management, and the PMI is the Purchasing Managers Index. Okay. So one of the things we've been talking about the last few weeks is this mix between the upstream and the downstream inflation indexes and manufacturing indexes. And what we've seen is that the consumer price index is still pretty high. It's still too high. Consumers are spending a lot, and they're spending a lot on services, and services prices are up a lot. But we've noted in recent weeks that a lot of the manufacturing indexes have been down. And we think what's happening is companies are saying, oh no, the consumer's spending a lot today, but we're worried about a future recession. And so they're throttling back their production of goods and trying to, keep pricing where it is and not be overproducing into an expected recession. And that's what we've seen a lot lately. And, I think just last week we were talking about manufacturing indexes that were horrible. The PMI from last week was really interesting. So the overall index came in at 49.1. Anything under 50 indicates contraction. So you think, okay, wait, that's more decreases. But here's where it got interesting. The prior month was 47.1. People were expecting 47.2. Doesn't sound like a big difference, but when the market's expecting 47 and they get 49, that's actually, it's better than what they were expecting. The other thing is the new orders index was 52.5. And so again, anything over 50 indicates expansion. And so for new orders, it actually looks like this stuff is starting up again, and the economy is just refusing to roll over. Now, the one caveat that we have here is the prices index was 52.9. Again, everything over 50 means getting bigger, versus 45.2 last month. That's a huge change. In 1 month to go from 45 to 53, that is a huge change in a month. And so here's where we are right now. This piece of data, which contradicts the data that we've been seeing the last few weeks, we keep talking about inconsistent data. So if you guys want to go back and see, our 5 things video from last week or the week before, you say, wait a minute, this is a contradiction. Yes, the data is changing every week. But basically what this is telling us is that manufacturers are seeing more new orders at higher prices. So, get ready for the consumer to keep spending and for inflation to continue to be a problem. And I don't know for sure, but I think it's a really good bet that Jerome Powell and the governors of the Federal Reserve had seen this data when they said, yeah, we're not going to lower rates yet. They want to hold on to where they are right now. They believe that the current Fed funds rate is restrictive, which is the fancy finance way of saying high enough that it should bring inflation down. They're looking at this, wait, new orders, higher prices. You know what? We're just going to stay right here where we are and not change this at the moment. Again, I'm not in the room with them, but it's a pretty good bet they'd seen this data when they decided to say, yeah, don't count on a reduction in interest rates in the next couple of months.
Yep. Higher for longer is definitely